Let us see our next question. On 28th of January, an importer customer requested a bank to remit Singapore dollar 25 lakhs under an irrevocable LC. However, due to unavoidable factors, the bank could affect the remittance on 4th of February. The interbank market rates. Highlight the portion interbank market rates were as follows on 28th of January and on 4th of February. The exchange rates have been provided to us. 72.85/90. 72.91/97. For Great Britain pound 1.7840, 1.7850, 1.7765, 1.775, and for Great Britain pound exchange rates have been given to us. 3.1575/3.1590, 3.1380/3.1390. The bank wishes to retain an exchange margin of 0.125%. Required, how much does the customer stand to gain or loss due to the delay? Note, calculate the rate in multiples of 0.0001. It means that say we are required to make the computation of the exchange rate up to 4 decimals, like that information is given. Please go through the question, then we will discuss that say how to do answer. Friends, over here, basically the question is lacking with the information that the importer customer is basically belonging to which country. Going with the institute suggested answer, wherein the assumption which they have made is that it is an Indian company which had imported goods and it had to make payment in Singapore dollar currency. With that, so the answer is calculated by institute and we are following the same pattern. Of course, we understand that so the clarity should be given by the institute that said this importer customer is basically an Indian company. So the Indian company is required to enter into the transaction for sell of rupees, purchase of dollar, sell of dollar, purchase of pound, and sell of pound, purchase of Singapore dollar. Like that, so there is a combination of these three transactions. With that, say you will be able to purchase the Singapore dollar. This is what we understand. Looking to the information of the question, it is very clear that say when the company had entered into a contract with the bank, at that time the bank must have told to the customer that because of any unavoidable circumstances, if there is a delay in the remittance, then in that case the profit or loss due to such delay will be passed on to you. So if at all there is a profit, you are lucky. If at all there is a loss, then in that case you have to bear the loss. Because language of the question clearly specifies that on 20th of January, an importer customer means a company which has imported goods and it is required to make the payment in Singapore dollar currency, requested the bank to remit Singapore dollar 2.5 million under an irrevocable LC. However, due to unavoidable factors, the bank could affect the remittance on 4th of February. The interbank market rates were as follows: the exchange rate says provided to us, and these are provided as the interbank rates, and later on they have provided a margin rate, means whatever the answer that say we compute, to that so the margin will be added, because over here it is sell of rupees and purchase of Singapore dollar. It means that you are required to sell more amount of the rupees to buy the Singapore dollar. Exchange rate is provided to us as rupees per dollar, dollar per pound, Singapore dollar per pound. The rates are provided for 20th of January as well as for 4th of February. The bank wishes to retain an exchange margin of this percentage. How much does the customer stand to gain or loss due to the delay? It means that say because of this delay, if at all there is any profit or loss, then that amount of the profit or loss will be passed on to the customer. Calculate the rate in the multiple of 0.0001. So friends, over here we will make the computation of the exchange rate for rupees per Singapore dollar on 20th of January and at the same time so on 4th of February. Suppose by chance say it comes like this, it is over here 50 and over here it is 51 for example, means say purchasing of 1 Singapore dollar is becoming expensive by 1 rupee. So it is 1 rupee is excess amount that you have to give per Singapore dollar plus margin. This is the amount of the loss that you have. Multiplying with 2.5 million which they have provided, this is the total loss that you will have. And suppose the rates are for example 50 and 49, then in that case you will be able to save 1 rupee plus margin on that. That is the amount of the savings that you will have so due to the delay. This is the way we are required to make the computation of the answer. So over here, first of all, we'll make the calculation of the exchange rate on 20th of January for rupees per Singapore dollar. Please write an answer. Working note number 1, calculation of exchange rate for rupees per Singapore dollar on 20th of January. I want you to tell me the answer, that is the relevant exchange rate, and put your answer in the chat box. So friends, over here we want to know the exchange rate between rupees and Singapore dollar. The question is that so what is the amount of the rupees for 1 Singapore dollar? We want answer in rupees term, not in Singapore dollar currency term. Again Singapore dollar currency, which currency is provided to us? Pound is given. We want answer in rupees term, not in pound term. So pound is kept in division. Against pound, dollar is given, and against dollar, rupee is given. This is the way we are required to mention the rates, that is say the currencies. Now on 20th of January, these are the rates. So over here, rupees per dollar, in that 72.85 slash 72.90. I want dollar per pound, the same is given. So 1.7840 slash 1.7850. I want pound per Singapore dollar. However, Singapore dollar per pound is given to us. So we are required to make a reciprocal value. So 1 divided by 3.1590 slash 1 divided by 3.1575. We just have to multiply all the values. So 72.85 into 1.7840 divided by 3.1590. So 41.1410. Importantly, we are required to make the computation of the exchange rate up to 4 decimals. Then 72.9 divided by 72.9 into 1.785 divided by 3.1575. So 41.2119 rupees per Singapore dollar. We know that say we are interested in the transaction of sell of rupees and purchase of Singapore dollar. So higher rate would be applicable, 42.2119. Next, working note number 2. Calculation of exchange rate of rupees per Singapore dollar on 4th of February. Please put your answer in the chat box. Friends, over here there is a mistake on my end. It is 41.2119. So let us see the exchange rate on 4th of February. Again the same formula. Rupees upon dollar into dollar upon pound into pound upon Singapore dollar into Singapore dollar is equal to rupees. The formula is going to remain same. Now I want rupees per dollar. The same is given to me, 72.91 slash 72.97 rupees per dollar. Next it is 1.7765 slash 1.775. It is dollar per pound. Next it is 1 divided by 3.1390 slash 1 divided by 3.1380. It is pound per Singapore dollar. So over here 72.91 into 1.7765 divided by 3.13 90. So 41.2630 slash 72.97 up into 1.7775 divided by 3.1380. So 41.334 rupees per Singapore dollar. That is the way we are required to write so the two exchange rates. So friends, over here we understand that say now we are going to purchase Singapore dollar at the rate of 41.334. So we can see that the purchasing of the Singapore dollar is becoming expensive. So 0.3334 minus 0.2119. So it is becoming expensive by 12.15 paise. Multiplying with say 2.5 million. So it is 3,03,750 plus 0.125 percentage, because that is the amount of the margin which you are required to pay. So that comes to in total 3,04,130 approximately. That is the amount of the loss that you will have. So please write an answer. Purchasing of Singapore dollar on 4th of February is expensive. Full stop. So there is a loss to customer. Full stop. Amount of loss is calculated as under. In the breakdown, difference between exchange rate into amount plus margin. So 41.334 minus 41.2119 multiplying with 25 lakhs plus margin. So 41.334 minus 41.2119, that is 12.15 paise into 25 lakhs. That comes to 3,03,750 plus 0.125 percentage. So overall loss is rupees 3,04,129.6875. This is the amount of the loss that you will have. This is what we understand. Please write down a small note for the answer. In this question, comma, we are assuming that an Indian company has imported goods, comma, for which it is required to pay in Singapore dollar currency. Full stop. In the trade on further, due to delay in payment, comma, whatever is profit or loss, comma, it will be passed on to the customer, comma, that is what we understand. That is what we understand from language of the question. This is what we understand.